What's going on, guys? In this video, we're going to go over my strategy. Hands down, I think is probably the best strategy that a new trader or even an experienced trader can use if you're looking to scalp the NASDAQ futures, ES futures, gold, even stocks and options. We have a lot of people, including myself, that trade options and stocks, and we use this particular strategy. The strategy is a 20 SMA. But before you guys tune off of this video because you think you've seen it before, I want to explain to you some of the other indicators that are on the chart and how I'm using them in conjunction with the 20 SMA strategy, because I think it's going to be really good for you. So first things that we're going to go over, and again, I'm going to outline and I'm going to express and detail it in my best version. Okay, so we've got a linear regression channel 50. What is that? Basically, it's taking the previous 50 channels for the time frame that you're looking at, and it's giving you a standard deviation of 0.5 off of that. Okay, so the middle line is going to be your mean. Then you're going to have your standard deviation to the high side and your standard deviation to the bottom downside. Now, I use this a lot. If you're looking for this specific indicator, I just want to let you guys know. I've tried to use it on a bunch of different platforms. Some platforms have it, some platforms don't. And the ones that do, it doesn't really match up. I use Thinkorswim platform to chart and trade equities and options. But when it comes to trading prop firms, I also use this to chart. So I will have on my other monitor, I will have either my Project X platform or my TraderVate platform that I'm going to be executing orders on, and I'm going to be doing all my charting here. So that's going to clear up any questions. So if you want it, go ahead, make an account with Charles Schwab, download the Thinkorswim platform. You guys can all get it. Okay, so with that being said, I want to show you guys something else that I use on the screen. It's the daily 5 SMA. That daily 5 SMA is put here because it's going to come into play multiple times throughout the week. Either it's going to provide areas of supply or demand, depending on if we're trading over or under. Now, the purple line that you see on the screen is your 20 simple moving average, and I also trade this on the 5-minute time frame. Before the question gets asked, can you trade this on other time frames via 1 minute, 2 minute, 3 minute, 5, whatever time frame below 5 minutes? Can you trade it on the 15, 30, 60 minutes? Absolutely. Just understand, the higher time frames that you're trading, the more risk that's going to be involved, because the average true range of those candles is going to be much larger, which is going to entail you to have bigger stop losses. Okay, and it's gonna force the trades to wiggle and need more room to breathe. So if that's something that you're interested in, trade a higher time frame. I personally like using it on the 5-minute time frame. I do also use it on the 1 and 2 minute chart. The only problem that I've had is that when the market in real time is being traded live, sometimes we go into these pockets of consolidation where the market starts to get very barcodey. Okay, and it's going up and down and up and down and up and down. The smaller time frames will tend to get chopped up a little bit more. I've always nestled into the 5-minute time frame on all my strategies. Now let's get into the exact strategy. What are we looking for? I've got my drawing tool here so I can make some notations on the screen as we go along. Again, it's very, very simple. What we are looking for is price action to change momentum. Okay, change sides of momentum. So when you're trading over your 20 SMA, you can look at that as more bullish price action. You want to be looking for long setups. You want to be looking to take those long setups. Number 2, I use this strategy to scalp, and my scalps can range between 5 and 15 points. Why such the big discrepancy there? Well, if I'm really looking to trade a little bit heavier size, I'm going to look for 5 points. Because obviously, let's say if I'm trading one mini contract and I scoop up 5 points, it's a $100 trade. If I'm trading 5 micros, which is generally my sweet spot, it's around a $50 trade. Now you can do the math on how many contracts or what size you want to play based on the account size that you have and how much you're comfortable risking. Here's my recommendation. Again, and it's just an opinion. I believe that if you're trading a $50,000 account, you should never risk more than 10% of that account. And even that's a little high, but risk no more than 10%. Now, how you want to risk that, whether it's on one trade or split up into multiple trades, is on you. But I say risk no more than $250 until you can start to build a buffer. If, let's say, in your trading account, you've got a $2,000 buffer, then you can trade $400 or $500 worth of risk. Okay, so that kind of clears up that. Now, what we're looking at here is I am looking for price action to be trading over the 20 SMA, and I'm looking for it to now close under the 20 SMA. That's step one. This is a 1, 2, 3-step process. Okay, so it's a 3-step process, and again, you are waiting. Okay, you are waiting for something to happen. You are waiting for the candle to close and lose momentum below the 20 SMA. Or you are waiting for a candle to close over the 20 SMA. Does that make sense? That's step one. Now that step one has been established, what's step two? Step two is going to be entry. Where do you specifically get into this trade when a candle closes over the 20 or closes below the 20 period moving average, 20 simple moving average? Step two is going to require a following candle, okay, following candle to take out the low wick of the reason why candle. Now, the reason why candle, I'm going to explain this because some people are new and they are, not understanding what the reason why candle is. The reason why candle is nothing more than simply why do we want to take this trade? The reason why we want to take this trade is because momentum is shifting and we close below the 20 SMA. The reason we want to take this trade long is because we closed over the 20 SMA. That's the reason why candle. Now, how many candles am I willing to enter a trade after price has closed below or over the 20 SMA? For me, typically, I want to see this confirm within 1 to 3 candles. And if it does confirm within 1 to 3 candles, I will enter that trade. What negates getting into the trade? Well, if let's say, for example, the following candle opens up and it never takes out the low wick. Again, I use wicks, not bodies. So if we never go and confirm the low wick of the reason why candle, there's no trade. Okay. And if it closes back over the 20 SMA, then now this is now a long setup and you are waiting for a following candle to confirm the high wick of that long setup. Does that make sense? So once that is established, we can now wait for another opportunity for when this does confirm. Because notice here, and this is Friday's price action, at 6:50 in the morning Pacific Standard Time, we close below the 20 period moving average, okay, 20 simple moving average, and the following candle confirms the low wick of the reason why. Your entry is here. Now, where is your stop loss? Your stop loss is in one of two places. Your stop loss is a closure, okay, a candle that closes over the 20 SMA. Now that would be signifying that the trade is technically damaged, it's broken, you don't want to be in that trade anyways. That's step number one, or reason number one, you can exit a trade. Number two would be it takes out the entirety of the reason why candle. Now, if you're going to use that as your stop loss, this right here was a 40-point range candle. So you're going to be giving up 40 points. I don't think anyone wants to give up 40 points trading 2, 3, 4 mini contracts. So you're going to have to position yourself in micros that can withstand that type of drawdown. So if you're trading 1 micro, you're going to lose $80 on that trade. If you're trading 2, you're going to lose $160. If you're trading 3, you're going to lose $240. So if I'm comfortable risking $240, I can trade 3 micros on this particular setup. Now, what's my take profit? If I'm going to risk 40 points, do I want to just take 5 points? No. The only way I'm going to take 5 points is if when it confirms that I'm in this trade, I go into that trade with the mentality of, if this doesn't pay me 5 to 10 points before it goes against me 10, 15 points, I'm going to take my money. That's the only way that I'm going to scalp 5 to 10 points. I'm going into that trade with the clear mentality, the clear mindset of, I want this to pay me between 5 and 10 points before this runs against me 10 to 15, 15 to 20 points, right? Like I'll operate the negative risk to reward ratio, but I want it to happen fast. Now, if I'm looking for a little bit of a bigger move, some of you guys want a bigger move, more than 5 to 10 points. Maybe you want 20 points. Maybe you want 25 points. So in that particular scenario, I would risk 3 micros. I would give myself the 40-point risk, but I'm going to do one of two things for a take profit. I'm going to look for a take profit of half of the reason why candle, which is 20 points of the 40 points given. I'm going to look for number two. Here's another option, a full 1-to-1, which this would have paid you a full 1-to-1, 40 points. Or I'm going to look for one or half of an ATR. ATR is average true range. That's the line down here at the bottom of my screen. I always know what the average true range is of the time frame that I'm trading. So at this particular time, I'm looking to trade. The ATR was sitting at 19 points. So in this particular scenario, I would be looking for 10 or 20 points if I'm going to use an ATR take profit system. You can also use an ATR take profit system as your stop loss as well. For me, I market order into these trades and I market order out of these trades a lot of times with no stop loss and no take profit in mind. Okay, so a lot of these times I'm getting into the trade with the acknowledgement that if this goes against me 35 points, 40 points, I have to cut this trade dead in the water. And either A, that account gets locked up for the day and I go trade another account, or if it manages to win and be a successful trade, look to see, did I just take 5 points or 10 points? In that particular scenario, I'll look to continue to scalp 5 points here, 5 points there. That'll kind of set the tone for if I'm going to continue to scalp. If I do manage to catch, let's say, 15 points, 20 points, more than likely, I'm going to stop trading that account. We're going to lock up the $100. We're going to lock up the $150, the $200, whatever it is based on the amount of contracts that I was trading. And we are going to just wrap it up. It's a one and done trade. If you would have looked at this trade on Friday, it was a clear winner. Now, you could have also used the linear regression as your take profit. So between the entry price of 23,262 down to the linear regression was sitting at 241, this was also 20 points. Are you starting to see how half of the reason why candle, one ATR, and the linear regression is all kind of matching up around that 19 to 20 points? That would have been a great confluence to say, hey, I might be looking for 10 to 20 points on this particular trade because I've got some multiple things matching up. If you guys want to learn how to trade this strategy, Apex is 80% off. You guys can definitely practice with some fresh evaluation accounts. That way you guys can track your stats. 80% off using code DAnthony. If you guys want to trade with myself and the team, you guys want to get access to all of my strategies and trade with me in the community, that link is down in the description box below. I'll see all of you guys on the inside. Have a blessed and safe weekend, and let's do some good trading next week, guys. I'll catch you guys all next time.